Welcome to Capital Intelligence. Today, we're doing a deep dive explainer into the hidden psychological forces that are literally shaping our digital financial choices. Have you ever noticed how checking your investment portfolio today feels, well, a little bit like checking your social media feed? I want you to grab your phone for a second and honestly ask yourself, who is really steering your financial decisions? Because when we're swiping through today's beautifully designed gamified trading apps or, following charismatic financial influencers online, we feel like we're entirely in the driver's seat. But a mountain of new behavioral research suggests our autonomy, yeah, it might actually be an illusion.
Section 1. The New Face of Finance.
Okay, let's dive into this. To understand where we are right now, we really have to look at how retail investing has evolved. We have come a long, long way from the days of those clunky analog green screen terminals that were strictly for professional brokers. Today, the sheer scale of digital democratization is just mind-blowing. By 2024, the number of demat accounts in India alone surged to over 15.14 million. That is an unprecedented retail investor boom, and it's being completely driven by hyper-accessible platforms, cheap data, and this massive public hunger for financial content that's actually easy to understand.
And stepping up to feed that exact hunger is a completely new kind of creator, the finfluencer. Basically, these are individuals who take highly complex financial jargon, stuff like stock analysis, macroeconomics, real estate, and distill it down into engaging, bite-sized narratives on social media. They've essentially stepped in to bridge a massive global financial literacy gap, almost entirely removing the psychological barriers that used to keep everyday people out of the market.
But what researchers found here is just fascinating. A recent CFA Institute report revealed that a staggering 82% of retail investors have actually acted on advice given by a finfluencer. Over 8 in 10. It really highlights the immense, democratized power these creators hold over actual market movements and individual portfolios. But as you might guess, this completely new digital landscape brings some entirely new risks along with it.
Section 2. The Dopamine Trap. Let's look behind the glowing screens of modern finance to see what is actually keeping us hooked. The industry politely calls these digital engagement practices, or DEPs. But really, these are highly intentional design elements precision engineered to maximize your time on an app. We're talking about virtual confetti dropping when you make a trade, push notifications urgently highlighting market volatility, and even user leaderboards. Researchers literally call this the gamblification of finance because it deliberately creates a cycle of variable, unpredictable rewards. Sound familiar?
And this brilliantly illustrates the massive shift we're seeing in how markets actually operate. You see, traditional economics always assumed the investor was this perfect, rational actor who carefully calculates utility and risk. But modern investing, it treats us as emotional and behavioral creatures, totally driven by dopamine loops, instant rewards, and social validation. Simply put, these platforms are designed for the human brain, not the human calculator.
And guys, this isn't just some abstract psychological theory. It has real, measurable market impact. Research from the UK's Financial Conduct Authority showed that gamified push notifications and prize draws alone can increase trading volume by up to 12%. 12%. These features deliver an immediate dopamine hit, which directly encourages frequent impulsive trading and some seriously dangerous herding behaviors.
Section 3. Dark Patterns and Sludge. Because honestly, it goes much deeper than just colorful confetti. Enter dark patterns. These are user interface designs that covertly manipulate you into making choices that benefit the service rather than you. Behind the scenes, algorithms and interfaces are carefully engineered to subvert your autonomy. They might trick you into paying hidden junk fees or suddenly rush you into a financial decision by creating a totally false sense of time scarcity. And then there's the opposite tactic, known in the industry as sludge. Sludge is the intentional addition of excessive friction. It's what happens when an app makes it incredibly easy, like 3 clicks easy, to deposit money and start trading, but somehow significantly more cumbersome, confusing, and time-consuming to actually withdraw your funds or close your account. It's basically the digital equivalent of trying to cancel a gym membership.
Section 4. The Psychology of Trust. Now, you might be wondering, if these digital traps exist and are so common, why do we keep falling for them? Well, it's because finfluencers often act as a central node, sitting right in the middle of a vast web of financial information. Younger investors are especially vulnerable to herding behavior here.
Because if influencer feels highly relatable, like a smart friend giving you advice, they provide a powerful form of social validation that often completely replaces fundamental, independent financial analysis. In the academic world, this is explained by the source credibility theory. It basically tells us that authenticity and perceived trust actively amplify persuasion, sometimes entirely overriding cold, hard logic. Think about it. We often trust an influencer because they are consistent and relatable on video, not necessarily because they possess actual, verified financial expertise. Because of this very human blind spot, verifying trust, credentials, and authenticity is literally your only true safeguard. Taking the time to actively look for professional qualifications, or just checking if an individual is actually registered with regulatory bodies, is an absolutely vital step before acting on some 60-second video clip that promises outsized returns.
Section 5. Regulators strike back. Recognizing these massive behavioral shifts, global watchdogs are absolutely stepping in. We are seeing a coordinated, worldwide regulatory response. In the US, the FTC is actively targeting dark patterns and junk fees. The EU is aggressively utilizing the Digital Services Act to protect user autonomy. And the UK's FCA has introduced a strict consumer duty standard. Crucially, regulators are shifting to a proactive approach, meaning they want to stop deceptive designs before they even launch, holding platforms accountable for the overall net impression they create for the user. Furthermore, organizations like the CFA Institute have outlined specific recommendations for policymakers to foster a genuinely trustworthy ecosystem. This includes mandating transparent disclosures, conducting routine behavioral audits to catch that deceptive sludge we talked about, promoting educational content, and mitigating recommendation algorithms that just blindly push unnecessarily risky trades.
Section 6. Reclaiming your financial mind.
Look, regulation takes time, and the markets are moving right now. So how can you navigate this environment today? Well, it's really important to note that gamification isn't inherently evil. While negative gamification triggers impulsive trading, positive gamification uses the exact same behavioral science to align with your long-term goals. For example, some platforms now reward users with a diversification score, which tracks your progress and gently nudges you to build a healthier, much more balanced portfolio over time.
So the crucial point is this: your personal financial literacy is your absolute ultimate shield. Academic studies consistently show that financial literacy strongly moderates the relationship between digital trust and your intent to invest. Simply put, it gives you the evaluative capacity to look past the relatable authenticity of an influencer and critically assess the actual financial product on your own terms.
We live in an incredible time of financial access, but that democratized access requires constant vigilance. The tools to build wealth have literally never been easier to use, but their underlying designs have never been more sophisticated. So next time you open a financial app or see a viral stock tip pop up in your feed, take a step back and ask yourself, are you playing the game or is the game playing you?